You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Wednesday, 5th day of April, 2023. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is 9:30 a.m. to 11:30 a.m. Eastern. Now that's reserved for members only and those who are taking their 1-week free trial. If you've never taken your 1-week free trial, you can do so by going to mytradingiq.com. And at the very top of the page, there's a button that says free trial. Click it, the journey begins. Now, it doesn't matter what day of the week or weekend that you sign up for the free trial, you'll get 5 consecutive trading days with unfettered access to every tool, every resource that our lifetime members have access to. And you're probably wondering, how much is that going to cost me? Well, we foot the bill. That's right. We invest our time, energy, and resources in you for 5 trading days so that you can figure out if you really have what it takes to become a trader. Not everybody's cut out to be a brain surgeon or an airline pilot or a trader. But there's a burning desire in your heart to become a trader. You're going to need somebody to teach you how to do the job. Just like if that burning desire was to be a pilot, well, somebody's got to teach you how to fly. And if you're going to do brain surgery, somebody needs to teach you about, what a scalpel is and the importance of having an anesthesiologist along with you, which, by the way, the anesthesiologist, he needed somebody to teach him how to mix and administer the drugs so that it only knocks you out for a little while, not for the long haul. You get my drift? Okay, fair enough. So at 11:30 a.m., the live training room ends. We take a whopping 30-minute break, come back at 12 noon Eastern for the afternoon broadcast, which is different from the morning broadcast in its format, in its content, and it's open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast. The best way probably is to just go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you're done. You only have to do that once. Going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of doing it that way is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join the afternoon broadcast live. Just point your browser to our YouTube channel. which is very easy to remember. You've already memorized the youtube.com part. Just throw in a /CFRN. That's simple. youtube.com/CFRN. Now, not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there's over 2,200 daily live broadcasts archived for your educational and viewing pleasure. Now, it's also a good way for people who are new to the world of CFRN to get to know who we really are. Not just today, but you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Who are we then? I don't expect you to listen to all 2,200 plus daily episodes. But go back 6 weeks, 6 months, a year or more, and pick days at random and just listen to little snippets. You'll quickly recognize the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. And you'll also learn not only about our strategy and our indicators, but the very vibrant community that we have. A community that's been building since 2005. Now, if you're logged into the YouTube stream today, you already know that the title of today's broadcast is the most important candlestick signal that every trader needs to know. And we're going to talk about that. And I'm going to show it to you. And then if you missed yesterday's broadcast, I'm going to tell you to go back and listen to that. Fair enough? All right, let's open with a word of prayer as we do. Friday, Good Friday, we're taking the day off. A lot of the world takes Monday off at Easter. So the markets may be quiet Monday, but we'll be here Monday and we'll be trading on Monday. Now, 1 hour into this broadcast at 1 p.m. Eastern, Michael will come on. Well, first at 12:45, Michael will come on and give us a recap of the live training room. And then at 1 p.m. Eastern, we'll go live on the TradingView platform and do some live trading for about 30 minutes. Now, members, of course, and those taking the trial get 2 hours of that stuff every trading day. But whoever you are and wherever you are, you'll get 30 minutes of it every trading day. So if you're listening to this after the fact, and that's really what you're after, feel free to fast forward an hour. It's okay. Our feelings will not be hurt. But anyway, the big holiday for believers, for Christians, Easter. Yes, we celebrate the birth of Jesus at Christmas, although some say he was born in July, but December 25th is the day we chose. Easter, that's really what separates us from every other religion. Many prophets, many so-called messiahs were martyred, crucified, but only one rose from the grave. And that's really what sets Christians and Easter apart. You see, Easter is about real people, things that really happened. Non-believers like Josephus, go read his writings. He was definitely not a believer, but he chronicles the activities of what happened almost as if you were reading from the Bible. Easter's more than a story. It's history. It's his story. Because history is about real people, real places, real things, which are exactly what we find in the Gospel of John. Just look at the real people from real places that we meet on the day Jesus rose from the dead. Here's John 20, verses 1 and 2. Early on the first day of the week, while it was still dark, Mary Magdalene went to the tomb and saw that the stone had been removed from the entrance. So she came running to Simon Peter and the other disciple, the one Jesus loved. That would be John. First, there's Mary from the town of Magdala. That's what Magdalene means. Then there's Peter, a fisherman from Bethsaida, 6 miles northeast of Capernaum, who was courageous and impulsive enough to sprint straight to the tomb. Even though grave robbers were rumored to have snatched Jesus' body. And then there's John, the other disciple. John must have been one of those quiet, competitive types, because he later mentions how he whooped Peter in the first Easter 5K and made it to the tomb first. Mary, Peter, and John were real people. And that's really good news. It means that Easter was about real people back then and is for real people even now. Real people like you and me who find joy in talking today to the living Jesus and who will one day run through our own tombs into eternal life. Thank God that Easter is history, a very real event that really took place, and that really blesses people all over the world. Join me in a word of prayer. Heavenly Father, come before you today with hearts filled with gratitude for the gift of your Son, Jesus Christ, who overcame death and gave us eternal life. As we reflect on John 20, we are reminded of the hope and joy that comes from the resurrection of our Lord. Just as Mary Magdalene went to the tomb early in the morning and saw that the stone had been removed, we too rejoice in the victory over death that Jesus has won for us. God, we pray that this Easter season will be a time of renewed faith and commitment to following Jesus. May we be inspired by the courage and devotion of Mary Magdalene, who despite her grief and confusion, remained steadfast in her love for Jesus. As we celebrate the resurrection, may we also be mindful of those who are still in the darkness of doubt and despair. May we reach out to them with the message of hope and love that Jesus brought to the world. Father, we ask for your guidance and strength as we continue to follow in the footsteps of Jesus. And we pray that our lives will be a testament to the power of his resurrection. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. Okay, well, let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. This just came across my screen. Ukraine war live update. Zelensky makes another rare visit abroad and thanks Biden for another $2.6 billion. That's B as in billion. That's your taxpayer money. I better not get started on that. My heart breaks for the Ukrainian people. My heart does not break for the corrupt officials, for those. Our taxes are going to pay the salaries of the officials in Ukraine so they will keep showing up to work every day. They need our money more than we do. Where a carton of eggs now costs, what, $6? Gas creeping back up to $5. One-bedroom apartment, $2,000. Told you not to let me get started. All right, here's where we stand. The Dow's the outlier, up 32 points. NASDAQ down 174. That's 1.5%. S&P 500 down 21. And the Russell 2000 down 22 points. That's a little over 1.25%. In the commodity basket, crude oil down 32 cents, trading 80.39 last. Gold up, unchanged basically, trading 20.38 last. Silver basically unchanged as well. Down a penny, trading 25.09 last. In the Asian markets at the close, the Nikkei dropped 474 points, 1.75%. Shanghai rose 16. The Hang Seng fell 134. And in the European markets at the close, FTSE up 28, the DAX down 83, the CAC down 28. So that gave us a mixed day in Asia, mixed day in the UK, and only because of the Dow being up 33 points, which is not really a lot for the Dow. It's the equivalent of the S&P being up 3 points. There's a 10-to-1 ratio between the two. It's a mixed Radio Wednesday here in the US of A. Now, let's take a quick look at Logic 247. That is our 24/7 around-the-clock E-mini alert service. Not just the E-minis, but also crude, gold, silver, and bonds. This recap was done by Valerie at 6:15 a.m. Eastern this morning. Some things have changed since then. She will update the recap this afternoon and then probably again this evening. We're in week 244. Over those 244 weeks, we've issued over 13,700 individual handcrafted alerts. We will probably hit 13,800 by close of business tomorrow. If not, we'll certainly hit it Sunday night when the market's open. And I will be sending out alerts Thursday night as well, even though we're not going to be here on Friday. And as to whether or not we're going to have a workshop on Thursday night, as we normally do, I haven't talked to Michael about it, but I think we might just take it off. We'll talk about it later. We'll be sure and let you know when we do make a decision. So since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 28 alerts. 2 never triggered. We're still waiting on 2. So that's 24 actionable alerts, of which 4, or 17%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible based on market structure, and a very simple 3-step process that we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. And for those of you who are taking the trial, you qualify for a one-on-one mentoring session as well. So make sure while you're on the trial, you take advantage of that. If after the trial, you make a well-informed and intelligent decision to become a passport holder or a lifetime member, no recurring fees, no upsells, no nonsense, you'll have unlimited access to one-on-one mentoring. You won't find that anywhere else. I know, I checked. Okay, so this week, yesterday we were at 20% stopped out. Today we're at 17%. Again, things have changed since then, for the better, I believe. And over the last 244 weeks, we've averaged 20% or less of the alerts being stopped out based on the risk profile I just explained. Keep in mind, you never risk more on a trade than the potential profit in a trade. That's a key factor. It's bad math, bad science. And while it might get you through for a while, ultimately, it will decimate your account. And nobody wants that to happen. Now, along with the Logic 247 alerts, which are based on current price action and can come out at 2 a.m. or 2 p.m., we have our original alert service, the Concierge Trade Alerts, and they're a little different. Number one, they're different because they're based on historic price action versus current price action. And the CTA report is published every evening shortly after the Globex Open. Monday night, I got them out at 6:35. Last night, I got them out at 6:35 again. We cover all the same markets with the CTAs as we do with the Logic Alerts. It's not an either-or proposition because they work together hand in hand. One supports the other. So what do you do with these numbers? When the report is published, we'll use the ES as an example, but you would apply the same principle to whatever market you trade. Make note of where price is at this point in time on your 30-minute chart. Then draw a line in the sand at the long target and a line in the sand at the short target. If price gets above the 30-minute BBC, that means it's trying to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's really that simple. No matter whether you're trading long or short, you have to look left to spot potential obstacles, be they support or resistance, previous swing highs, previous swing lows. And over time, you'll learn how price behaves when it reaches a weekly trading zone. And that's important, because once you understand that, the weekly trading zones will become one of the most important tools in your trading toolbox. Now here's the hard part. Resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, because this broadcast is open to the public and you're not a member or a trial member, if you want to grab a screenshot, go right ahead. So we're going to walk through each one of these individual markets. But first, before we do that, we're going to go where we always go at this time, to the daily chart. Now, again, the title of today's broadcast is The Candlestick Signal That Every Trader needs to know about. It's called the bearish engulfing candle. I posted a chart yesterday in the discussion group. When yesterday closed, we had a bearish engulfing candle. The high was higher than the previous day. The low was lower than the previous day. And the context was beautiful. See, a bearish engulfing candle in a flat market is just a continuation signal. But when you've had a nice uptrend and you catch a bearish engulfing candle, look at what you get. It's a beautiful thing. A bearish engulfing candlestick pattern is considered one of the most important signals for a new trader or any trader because it indicates a potential trend reversal in the market. Bearish engulfing pattern occurs when a small bullish candle, that would be this little green candle right here, is followed by a larger bearish candle that engulfs the previous candle's body. This pattern suggests that sellers have taken control of the market and are pushing prices lower, potentially signaling the end of an uptrend. By recognizing this pattern, traders can use it as a signal to exit long positions or even enter short positions, anticipating a further decline in price. It is also a useful tool for setting stop loss orders to protect against losses in the event of a trend reversal. Overall, the bearish engulfing pattern is a useful tool for traders to identify potential changes in market sentiment and take appropriate action to manage their trades and positions. And man, this thing couldn't have unfolded. If you didn't tune in yesterday, okay, we were talking about it, and here it is. We also talked about the support that price would have to get through. Now, what made this bearish engulfing candle double exciting, twice as exciting, is the fact that it came in right at this trend line where we connected the high of February 2nd, the high of February 14th. We spiked it, bearish engulfing. Now we've managed to get through support at the step line, support at blue and climbing. The next area for potential support is the 24% Fib retracement, and then the daily BBC. Now this candle alone opened at 41.34 and has put in a low at 40.99. So that's 34 points at $50 a point. And this may be just the beginning. Keep in mind though, price has to overcome this 24% retracement until it makes it to the daily BBC, at which point we expect there to be good support, good enough for a bounce. Will it be enough of a bounce to take out this high? Only time will tell. And if anybody tells you they know different, you should run, because they're more interested in your money than you are. That's a fact. Bearish engulfing candle. Now, the same is true of a bullish engulfing candle. That would be where you have a extended downtrend, like this uptrend. And after all the red candles, you get a green candle that engulfs the previous red candle. Okay, I don't have an example here to show you, but watch for it. Okay, and now the fact that we're seeing it on a daily chart makes it a really big deal, because the institutional traders watch daily, weekly, and monthly charts the way you and I watch 30-minute charts, 5-minute charts, tick charts, and range charts. Why is that? Because their accounts are denominated in hundreds of millions and billions of dollars, whereas the typical retail trader has an account denominated in maybe thousands or tens of thousands of dollars. Are we the liquidity for the institutions? Yes, but that's not a bad thing. Because if it's the institutional trading that moves the market, then all we have to do is do what they're doing long enough to get our goal for the day. Most of our traders have a 2-point daily goal. This candle I just pointed out represented, 34 points? You get your 2-point goal a whole lot of times, okay? We're just off the low of the session. This is frameable. This is suitable for framing, okay? This is truly how markets work, okay? If you're new to trading, when you look at a chart, it probably looks like chaos. But over time, as we teach you and train you and visit with you in one-on-one mentoring sessions, you'll learn to read the chart like you do a newspaper or maybe even a good mystery novel. Because the market does the same thing every day, but in a slightly different way. So let's go look at the 30-minute chart of the ES. Okay, the vertical line separates today, Wednesday, from Tuesday, from Monday. Now, with all the activity going on in Manhattan yesterday with the Trump arraignment, I expected some huge volatility, but markets, there was some volatility, but it mostly led into the arraignment. Now, you'll notice this long-legged doji. That's an indication in and of itself for a potential reversal in trend. The selling pressure was pretty stout. Buyers weren't buying. And so where did the market find support? At the weekly trading zone. When price rises to a zone, we expect resistance. When price drops to a zone, we expect support. Support, 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 until proven otherwise, and then it drops to the next zone where we find what? Support. If you were tuned in yesterday, you saw me draw in this, right here, this window of opportunity. Now, that was yesterday. Here we are today. From the 10:30 a.m. to 11 a.m. candle, here's what happened. Fill the window of opportunity. Patience, my friend. Market opened, ran up to the BBC. The pullback to the BBC holds more often than not. A leg, a retracement, a leg where we put in a higher low, a retracement, hit the BBC. You wait for blue and climbing to turn to red and falling, and then guess what? Lots of opportunities to get your goal for the day on the way down to the zone. We missed touching that target the first time down by, I don't know, a tick or two. Pull back to the BBC, another drop, pull back, held, and it held, and it held, and it held. Going the other way, it held, and 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 it held. You got to get that in your head. That will make your trading journey so much simpler. Do not fight the trend. Every alert in the Logic 247 channel and every alert in the Concierge Trade Alert channel are all based on the 30-minute chart. If price is above the BBC, that's the green line, stands for bull-bear cross. When price crosses above it, we expect higher prices. When price crosses below it, we expect lower prices. See how simple that is? Now, the human mind wants to make it more complicated. And all the vendors on the way to Wall Street They want to make it more complicated. Why? So they can sell you more stuff. Often for problems that don't even really exist, except in the mind of the person who is writing the ad copy. You don't have to fall prey to that. Here's the secret. Learn how to trade. Stop buying circus acts and parlor tricks. Once you learn how to trade, that's a life skill, and nobody can ever take it away from you. Our goal is for you to become self-sufficient, independent. We want you to stay on as a part of the community to help the next new person that comes along that once stood in your shoes. But you don't want to spend the rest of your life waiting for somebody to tell you when to get in and when to get out. You want to be able to look at a chart, read it, and take the appropriate action. And that's going to require patience and self-discipline. Unfortunately, that's two things we can't give you. That has to come from inside. But in your unlimited one-on-one mentoring sessions, we will help you develop patience. We will help you develop self-discipline and self-control. Okay? All right. Mike will be along here in just a couple minutes, so let's take a run through these markets. Now, I showed you that bearish engulfing on a daily, but can that also happen on a 30-minute chart? You bet. 5-minute chart? Yeah. 1-minute chart? But the larger the time frame it happens on, the more powerful the following move will most likely be. You get that on a weekly, you get that on a monthly chart. And remember, that's what the institutions are watching. Daily, weekly, and monthly charts. Now, candlestick patterns, that's not the latest thing to come down the pike. Rice traders, hundreds upon hundreds of years ago, developed what the Western world now calls candlestick trading. Candlestick patterns, candlestick signals. In fact, there's a PDF, if you get with Valerie, The Secret Life of Candles. I wrote that back in, I think, 2012. She'll be happy to send you the PDF or a link to it when you become a member. Just ask. Okay? All right, then. Let's see if we can move through the rest of these markets real quick. Where's the market find its support? Now, at the zone, support, 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 support. And we drop, and lo and behold, support. These zones were published Monday morning at 6:15 a.m. Eastern. We've published them since December 14th of 2009. Once they're published, they don't change for the entire week. They are carved in stone. Let's jump to the Dow. Okay, I said earlier the Dow was the outlier. Okay, I don't mean it's an out and out liar. I just mean it's behaving differently, slightly, than the other markets. We opened last night here, came down to the zone, red and falling turned to blue and climbing, pushed us up to the zone. When we dropped to the zone, we found support. When we ran up to the zone, we found resistance. And then when we dropped back to the zone, we found support. All of our members and free trial members had these numbers Monday morning, 6:15 a.m. Eastern. Russell opened last night. Blue and climbing turned to red and falling. The pullback to the BBC held and took us right to the target. Pull back to the BBC, took us to the target again. Then it took us down to the zone where we got a huge bounce. Now we've taken out that zone. And the next zone below is way down at 1712. In fact, that would be the lowest weekly trading zone this week for the Russell, 1712/1713. On the NQ, here's where the market's opened. We consolidated for quite a number of hours. below the BBC, at the weekly zone, and then here we go. We make our drop. We come just shy of the target. Okay. So what do? We pull back to the BBC, we spike up, we find resistance at the zone, and then we make the drop that takes us to the target, to and through the zone. Now, when price, only three things happen at a zone. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time is the slice. That's when price slices through a zone like it's not even there on your 30-minute chart. When that slice runs out of steam, it will typically retrace to the zone it sliced through and then continue in the direction of the slice. Crude oil, it tried to go higher off the open. There was enough there to get your goal for the day. Once blue and climbing turned to red and falling, you got to start thinking the other direction. So again, plenty of room to get your goal for the day. Pull back holds and the pull back holds and the pull back holds. And do we hit the short target? Yes. Yes, we do. On gold, I don't even know what to say about gold. I'll just let you look at it. We didn't hit either target. We overshot this zone. First, we found resistance like we did yesterday. Found resistance, and it looked like we were going to make a run at the long target. And indeed, you could have had room there in this one candle, which opened at 2045 and hit a high of almost 2049. That's $400 per contract in that little green candle right there. So you didn't even have to hit the target. Then we got below the BBC, huge drop, pullback's holding, and we got red and falling. So all we need to do is get below the step line and trade down to support, trade down to support, trade down to the zone. Silver, kind of the same story. Didn't hit either zone. Rare that happens, but it can. You're looking at it. You have to embrace all possibilities. And the euro. Come out of the gate last night. Consolidate. Drop below. Pull back. Resistance. 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 Did we hit the target? Yes. Did we keep going? Yes. Did we find support at the zone? Yes. That give us a bounce? Yes. And now we're back at the zone. Where should you expect support? Right here. Then right here. And then the zone. Same thing over and over every day in a slightly different way. And that's the sound of Michael. As we discussed the beauty of the bearish engulfing candle that has given us this lovely move. 34 points. If you're ready, sir, take it away.
Okay, I am ready. I am ready to go. Here we go. There and there. All right. So, get started right now. Let me make sure you can see everything. You can. Good. All right. So, if today is Wednesday, the 5th day of April, 2023. No. Excuse me. If you've not taken a free trial with us and you want to take a free trial with us, go here at mytradingiq.com, and right here is to sign up for your free 5-day training now, 9:30 to 11:30. Click on that and fill out the little form. It really is a small form. Just fill out the form, and you'll be sent all the information you need to get into the room. Now, if you're going to take the trial, you should also go here and download the trading platform. Okay, what I'm going to show you here is going to be a little bit of DT Pro and a whole lot of TradingView. If you do not have TradingView yet, you should sign up for TradingView anyway, just so you'll be looking at the same thing that I'm looking at. It doesn't cost you anything to sign up for it and take the trial. Okay. That's for the TradingView. For the DT Pro, you got to do the download and all that stuff, right? If you don't already have a DT Pro. If you already have NinjaTrader down here, there's all the instructions there. You're going to have to give us your machine ID. Okay, now there's one thing in here. The machine ID in the, I think in the newest web version, the machine ID is no longer the 5th line down in the Help About menu. It's the only line in the Help About menu. But either way, you can give us your machine ID for that, all right? Just follow the instructions and give us the information that we need. All right. Now the spreadsheet, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. So today, as I said, is the 5th day of April 2023. Made 2 ticks in the NQ, 19 ticks in crude, 16 ticks in gold, and 8 ticks on the ES this morning. That put us at plus 460 on the morning session. That's with 1 contract in the 2 hours. Though to get the goal for the day, it took 8 minutes and 1 trade to get the goal. And at that point, when I had 4 contracts on, we're up $600 a contract. Okay, not $600 a contract. Sorry, $600 total, not per contract. And we took a total of 17 trades this morning. Now, let me get the question box out in case anybody does ask any questions. Okay, Gary asked a question with Dwayne in there. And using that on a daily, if you were to use a 50 and a 200, a simple is fine on that, Gary. Okay, either one is fine, really. The death cross is what you're talking about. But I believe it's a simple moving average. Okay, so back to this. So we ended up with 460 this morning on per contract on the morning session. Now on the month, we're up $1,717 with 1 contract, 2 hours per day. That's over 3 days, averaging $572. We've now gone 64 to 65 days this year getting our goal, and we've gone 34 days since our last non-green day, right? It was a blue day, and 412 business days since our last red day. Now, this is where we want everybody to be over here, right? If you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, so right now we're on 4 contracts, then you would have only had to work 15.48 hours, about 15 and a half hours so far this year. That's on the whole year. You would have averaged $1,205 per hour. Now, that's not to say that every time you sit down, you're going to make $1,205 in an hour. But if you had 4 contracts on with me this morning, you're up $600 after 8 minutes. So far on the month, with 1 contract, we've traded 34 minutes getting our goal. And in those 34 minutes, we're up a total of $1,630 on the month with 4 contracts on. So it's there. That's where we want you to be. So on the year now, we're at $33,870. So we're 65 days, averaging $521 per contract per 2-hour trading day. All right, let's get into the actual trades. Now, we're expecting really big things out of gold today, and I'll show you why. Let me do this right here at the beginning. I know I only have about 9 minutes, but I still want to show you this. In the morning session, before we got started, we were looking at all the different scenarios that were happening. Here on the NQ, we had gotten down to this level right here, and we didn't know if we were going to bounce. If we were going to bounce, we were looking for it to bounce up to here. If we're going to drop, I had drawn this in here saying we should drop down to here. Now, when we get down there, I didn't know what we were going to do. If we were going to stay there and bounce back up to the ribbon right here, or if we're going to go all the way down to the next zone. It got here. It did hit this. It did actually bounce off of that, but then it came right back down through it. It's now using this area right here that I highlighted this morning as resistance. Okay, that was the NQ. Now the ES, you can see we highlighted, the ES started out right inside the weekly trading zone here. It was hugging the weekly trading zone for the first hour or so. And we were saying when the news came out, because we did have high impact news today, we were saying when the news came out, it's either going to go up to here or it's going to go down to here. And it got all the way down here, tapped it, and then it ran right back up, just about up to the zone. It hit the ribbon, the BBC right there, the leading line on the ribbon. Actually, that's not the BBC. That's the red and falling. That's the MA1. But it went all the way back up here and hit that, and then failed right back down to the weekly trading zone down below. Okay, so that was the ES. We did the ES, the MQ, and crude oil. I had highlighted this area this morning, saying if we fail where we currently are on the crude, then I would look for it to move down to here. Now this was this is the midpoint in between the weekly trading zones. That's what this yellow spot is right here. All right, and it made it all the way down there, bounced right back up to the ribbon, and now it's failing off the ribbon right here. So I would anticipate it move back down here to 79. on the crude. And the gold, this was a real puzzle today because it started out here at the weekly trading zone. And I was saying, this is the highest weekly trading zone. I was saying if it gets up above this, then this is kind of nowhere land up here, but this is the woo spot right here. And I'm saying if we get into the woo spot and the candle closes into the woo spot, this is a big area right here that it should move quickly through if it happens to close in there, but it didn't. I also circled this in here as a sweet spot within the woo spot. Woo means window of opportunity, by the way. And Dwayne, I'm sure I'll go over this in more detail, or if you didn't already go over this in more details, probably already did. But I had highlighted this area right inside here, saying that this is going to be an area of support, I think. And from there, it's probably going to bounce back up to the ribbon, which it did. And now it's kind of stuck there at the ribbon. I would think if it's going to get a big bearish move, I was really expecting a big bearish move out of this. And when this wick right here happened, we'll get into the gold right now. When that happened, there was a lot of gapping and stuff like that happened on the gold. It was right here. Okay, right here when it really fell apart right there. But we did have some really good trades on gold, and I was anticipating that this morning. And this huge gap right here when the news came out, right? That was the high impact news. Now we had low impact news that came out right here with this little gap. Okay, but it was that kind of a day with the gold today. Our first trade we had to break even. Our second trade we had to break even. Then our third trade, right here, our third trade on gold, we picked up 1 tick. Then the next trade we picked up 10 ticks to get us to 11. Then the next trade 3 ticks to get us to 14. Then 2 ticks to get us to 16. Then we stopped out to go back down to 6. Then we had 20 ticks right there to get us to 26. And then we stopped out again to get us back down to 16. Okay. Let's see. In here we had, this is during the break. It had a ribbon trade right there. If you wanted to take it, it's just a little bit higher swing. It was really flat. I wouldn't have done anything with that. That's why I didn't get an arrow, because the long term is really flat right here. As I move forward, it gave one of these would have been enough to get the long opportunity here, and you would have had to suffer through all that drawdown. It would have still, if you got into a proper entry there, you would have stayed in the trade for the move up. This was a trade right here that would have stopped you out. And all these here kind of like the same thing as this, just going the other way, and it's still working that one out. So we ended with plus 16 on gold this morning. Okay, and crude oil, we didn't have too much going on crude. Let's go back to the beginning. Here we go. Our first trade on crude was right here. We picked up 29 ticks on this trade. And then the next trade was right here. We stopped out. Now I should have had my stop at break even on that one. I think I kind of messed that one up, and we stopped out. That put us back down to 16 ticks on crude. I think that was all we did. It's not that was all there was. It looks like there was a trade right here, a ribbon trade you could have done right in there. You could have actually done another ribbon trade right here, and this arrow right here, you could have taken that. You could have taken this one too, but I probably wouldn't have. I would have been waiting for it to pull back to the ribbon after the cross. Right here, after the direction change, I would have been waiting for it to pull back to the ribbon. I think I went over that yesterday. That got kind of flat and we went into the break. During the break, there was one trade right here that would have stopped out, and I wouldn't have done anything else in there. So crude oil was okay. We had crude inventories come out today. If we go here, we'll see what the crude inventories actually were. It was a draw of 3.7 million. They're calling that good news. They used to call that bad news, but it was a draw of 3.7 million. On the ES now, let me hit auto on this. And what did we do with the ES? We just had a couple of trades. Yeah, so we didn't do anything all through here. It was all choppy and sideways. We had to wait until the news came out and start to actually move. Then we ended up with a break even on this first trade and a +4 on this one, I think, right? No, +8, I'm sorry. +8 on this one. And I was anticipating this getting down to here, this 4,100 number. I don't know if it actually did. Yeah, it did right here, 4,100. 4,100 plus a little bit. This was during the break though. I don't know if you guys, any of you guys that were there this morning were watching this, because it did basically the same trade over here. This time it went all the way down to it though, and got through it a little bit. This is not a trade here. I'm not sure why we didn't get an arrow there, because this wasn't overbought. The same thing right here. We're not going to get an arrow because it's not overbought. And it's not actually a trade because it's not in the red. Right? It needs to be in the red to get a ribbon trade if you don't have an arrow with it. Okay. And that was the ES today. And so the NQ, The NQ is where we got our goal for the day early on. Go back here, you can see there were a bunch of trades there. It was pretty wild this morning though, so we stayed away from it for a little while. Our first trade was this one right here. We put the trade on and we got 30 ticks profit. So again, with this, you know, the 30 tick profit thing, that's part of the automated stop to break even thing that we created last week. In here, if you go to configuration, configure, right here is a 30 tick target that goes on every trade that I put on the NQ. Now, if it were to go slowly toward that 30 tick target, I could move the target out, but usually by the time it's gone there, I can't even see price anymore. It's just gone, filled me at 30 ticks and starts pulling back. So that was our first trade. We ended up with 30 ticks on that one. You can see there were more trades through here, but I didn't take any of those. The market was just kind of jumpy and the ES was really sideways, so I was kind of avoiding all the indices. I did take another trade here and I got a break even. I took this one and I stopped out. So we went from 30 down to 10. And then I took this one and I got 12 more back to get us to 22. And then I didn't do anything all through here. I think I was doing training through there. I took this one right here and it stopped me out. That put me back down to 2. That's where we ended with the NQ on the morning session. This one, I was a little hesitant to take it because we were going sideways right here. And Ronnie in the room this morning actually even said, isn't it kind of congested? And I said, yes, it is. But the DOM right here was showing that from 48, where my entry was, up at 50 was a good target number. And that was just up above this swing high. So I really thought it was going to go up there and it didn't. It just came right down and stopped me out. And that was where I ended it for the NQ this morning. Okay. And you can see during the break, there were some more nice trades through here, but I didn't get any of those. So I'm about to start the live stream here in just a minute. To get to the live stream, you go here to TradingView.com, and go down to upcoming streams. It's going to be over here. They're all grouped over here, recent streams, and upcoming is down at the bottom. So ours is down here. Click on that one. Right, going to live stream right now. It can be another half an hour of live trading. If you have not taken a free trial with us and you want to, go here to mytradingiq.com, click right there, sign up for it here, download the trading platform. All that stuff that you just saw, except for the weekly trading zone stuff, all the stuff that you just saw was TradingView. The weekly trading zone stuff, that was this, that's all in DT Pro. The actual trades that I'm going to be taking right now, they're on DT Pro too. Okay, they're all on DT Pro. All right, so I'm going to do this and get into the live stream right now. If anybody has any questions, you can email or call. You can email support@cfrn.net. Okay, email support@cfrn.net. Now I'm going to hit refresh on this and then undo this and redo this and go to entire screen and do that. All right, so here we go. We did not get a lower swing over here on this move down on the ES, so we do not have a trade coming up right here. Okay, now this is a 7-tick range. This is a 16-tick range on the NQ, and the gold over here and the crude are both on 7-tick ranges. Now we had a lot of movement this morning because we had a lot of high impact news. So I don't know what we're going to get here in this half an hour span. But if anybody has any questions, or if anybody wants to see, any equities or ETFs or anything like that, all you have to do is type in a symbol. Right? That is what it's in there on the live stream. So we just don't have any trades yet, and it's really going to have to break out here to give us something. I mean, I could look at a different thing, like the ES is going to have to go down, exceed this swing low, then pull back up and get into the overbought to give us a trade. We're not going to get anything here on crude oil, so I just use crude oil. I'm going to go to like the Russell, TY on the Russell. Now I know with crude oil, see the RTY is just sideways too. If you go to the YM, it's going to be sideways. YMM sideways. Let's look at the bonds. ZB. There you go. But a little bit of something. It needs to put in a higher swing right here from this last move up, but it failed to. So let's try the ZF. That moves a little better than the ZB. Okay. And you can see I left this from the morning session. The reason I don't have the other line down here in the slingshot is because this part of the slingshot you only need for entry, right? That's the only thing you need for entry. You don't need the other part for entry. The other part is to help manage a trade, right? That other line right here is to help manage a trade. All right, so 5 years, still nothing. We're not getting anything here on any of these markets. How about equity? Let's look at that. And we're not going to look at that on the 7 range, but we'll look at it on, see, on the 7 range, it gave a trade right there, but we'll look at that one on the 50 range. Okay, that means every bar is a half a cent. So what it looked like here is we need it to pull back up and get into the ribbon and give a short. Right here, it's not giving you any indication yet that you should trade. Right now, it's saying just wait a few minutes. And well, it's going to be a lot more than a few minutes, I think. But wait. The alternative is look at on an even smaller time frame to see if you're going to have anything that might happen sooner. It's still giving the same indication. It did give a nice shorting indication right here earlier on the Apple. That was to sell 63.5, and it dropped down to 61.80. So, you know, you had 1,000 contracts at $1,500 right there. 1,000 contracts, 1,000 shares. This is suggesting it's got to pull back some more too before you get a trade. Okay. Does anybody want to see anything else? How about Bitcoin? We'll go to crypto for that one. And that is going to be this right here. Okay, we definitely don't want to do that on the 25 range. We'll do that one on like 1,000 range. So every bar is $10. Okay. That's not really giving us anything either. Not really anything to go on with that either. Earlier today, there were some shorting opportunities here off the ribbon, but that was it. Nothing major there. And it looks like, you know, if you look at it on even on a different type of time frame, like a 30-minute, it's got a long way to pull back up here to get up to the ribbon to short. But this is looking pretty bearish. It's bullish short term right here on the Bitcoin. All right. It should be bullish up to here to 28,275. And then that would be a big sell right there. Okay. That would get this up into the overbought. Everything would be screaming sell at that point. Okay. Do I use the 25 range on all stocks or Apple only? It depends on what the price is, Gary, how much volatility there is within the stock. You know, 50 range, let's go back to Apple and I'll point it out to you. It'd be easier to show you than tell you. Okay, so right here, this is 1,000 range. Okay, so every bar is $100 or something like that. $10, $10, I think, on 1,000 range. I think if you put it on a 50 range, then every bar is $10 for that. Sorry. If you put it on a 50 range, every bar is 50 cents. Okay. So if you put it on a 25, then every bar is a quarter. Okay. Every movement in price is 1 cent. So a 50 range is 50 cents. 50-cent bars. 75 range would be 75-cent bars. 25 range would be 25-cent bars. So that's how it all is in there. If it's a bigger thing, like, you know, this is Apple, but if I was doing something else that's more expensive, like Google probably is more expensive, right? No, Google's about the same price, so I'd use the same time frame for Google. What's more expensive? Tesla used to be, but it's not anymore. So anything in $100, $200 range, usually 50 is going to be pretty good. But you start getting up to like the $800, $900 range, then you're going to want a bigger bar for that. Okay, you want to get SPY? Sure. SPY, let's look at this one. That's not exactly it, but let's look at all. On all. So this is 400. So you might want to use 100 range on this, right? But you see, it gave a nice trade here off of the ribbon earlier. Okay, but all the same thing is what you're looking for. Price to commodity oversold and bounce down off the ribbon. Commodity overbought. Commodity overbought and bounce down out of the ribbon. Like right now, it's pulling back up here, so I'd be looking for it to drop down out of that. Right now, if you're looking for it for like options and stuff like that, if you look at it on the 30 minute, there's a lot of stuff in here that you wouldn't really need. If you just look at it with the MA1, with just the MA1. Let me see if I can do this. Just the MA1 and the BBC. Get rid of all this other stuff. Okay. Just the MA1 and the BBC. Get the MA1 crossing the BBC right here. You see the BBC is the green line. You can just barely see it right in there, but the BBC is the green line. When you get that bullish cross, the first pullback down to the BBC is usually going to hold, right? Like right here, we had the bearish cross, the full back up to the BBC. First pull back up to the BBC held, right? So that's a good indication of how to use it with the SPY if you're going to do it for things like options. But if you're going to day trade it, then you can day trade it on, because it's $400, you can day trade it on 100 range, probably be okay. Okay, so now I gotta put all that other stuff back on. Take these off and put all the other things back on. You can see all the arrows in here on 100 range. We're nailing it pretty well. Right there, and right there, and right there. And you know what makes the arrow come up, right? So when your long-term direction is bullish and you're oversold and you come out of the oversold. Right? Your long-term direction is bullish, you're oversold, and you come out of the oversold. Long-term direction is bullish, oversold, and you come out of the oversold, right? That's what makes the arrows happen. So you can see right in here, the arrows are nailing it pretty well today, as this week, right? That's how it works with the SPY. Now, we haven't had a single trade set up yet for the futures, so I don't know how much time I have. It's not 20 minutes, there's plenty of time in here. Well, if the NQ comes out of the oversold right here, it's going to trade. Okay, it's kind of got a weak move right here, but the pullback right here is shorter than the pullback right here. Smaller, so that's showing a little bit of strength on it. So it's got a little bit of movement right here. You could take, if you get an up close on this, it should probably work out to at least get up here to 34.25. Okay, if it comes together, it hasn't come together yet. The ES is no help at all. The ES has got bearish separation here. Okay, so the ES has got bearish separation right here, and there's the trade right there on the NQ. The ES has got bearish separation. It's just going flat. So that means the ES is changing directions right here by going flat right here. It's looking to get the long-term direction to change up. Now the NQ, I actually jumped on as soon as I said it. So my stop's at break even plus 2 ticks. There's 4 ticks. Now 35 is what I said I should get up to, right? All the way up here. 34.25. So this is my automatic 30-tick target. Did you see that? It was an automatic 30-tick target that was put on there. I was just going to bump that up a little bit. But so not a lot of follow through on this yet, right? There was enough to get your stop to break even. Oops. Enough to get your stop to break even if you wanted to. And none of the other markets are giving anything right now. I can go back to crude oil on this one. Do you want to see anything else? Does anybody want to see anything else? If I go through the list of people who are in here right now, just checking out who came from the previous meeting to this one. So anybody that was in the previous meeting came to this meeting. If you watched Dwayne all the way through from noon till when I started, then you can see the full package of everything that we have, the Logic 24/7 and the concierge trade alerts. Okay, it's not just what I do in the morning. It's not just this stuff, but you can see it works on all time frames, and there's more than just what we do in the morning. If you want to get involved with it, you don't have to. You can do just what we do in the morning, but if you want to do longer term stuff, over time, you may want to add that.
I got a request in the stream for gold GC.
Okay. Thoughts
which
on gold.
We already
right
have
now, gold is
up on gold futures.
Yeah. My thoughts right now on gold is it's got nothing. We don't really want to trade anything. On crude oil, it's changing direction right here. There's a question about the trade crude, Gary. There's no trade here on crude yet. But on the gold, let's just expand this. Okay, since this morning, it's had a rough time determining a direction. You know, these little moves down, a little bit bigger moves up. This is a little bit bigger move down. In the scheme of things, this is really colorful when I do this thing with a TradingView. The scheme of things, we're at 50% retracement to this move up right now, so it should probably move up. It's not giving us any indication of a trade right now. Okay, let me just get rid of that. That thing's crazy. It's not giving us any indication of a trade right now. The long-term direction is just barely showing a short, but we didn't put in a lower swing here, so I wouldn't do anything with gold right now. Okay. Up here. I wouldn't do anything with gold right now. And Gary, you had mentioned about the crude. This is all flat and changed direction right here. It may have a trade. You know, we still have 16 minutes left. We may get one more trade. I don't know. Over here on the NQ, it did get up to that prior swing high that I was talking about, 34.25. Okay, took me out with 1 point right in there. It did just barely put in a higher swing, but this is not oversold. So we're not going to have a trade here unless it gets to the oversold. And if it does, it's still going to disqualify the trade because the black line here is going to get into the red. So we're not going to end up with a trade there. I was hoping the ES right here was going to give us something, but you see how it's just flattened out. The long-term direction is just flattened out, so we're not going to get anything there either. I was not on a crude chart. Oh, you're right. You're right. I was looking at SPF chart. You are right, Gary. Thank you for that. Thank you for pointing that out. All right, so let's look at crude oil, and I'll tell you if we might have something there. We'll go back to the 7 range on crude. All right. So yeah, we want to get up above here. All right. I see we had to bounce off the ribbon right there, but we weren't really coming off a higher swing. Okay, so it's still pretty choppy in there on the crude too. But you were right. Thanks for pointing that out. It does. Where does it have a black arrow? Did I change the context in here? Oops. This is 0.02, I believe. Yeah, it is. Okay. So if I put on the no trade zone, we'll see if we're actually in a no trade zone right now. Yes, we are in a no trade zone. That's why it does not have any arrows. Okay. There's a black arrow at 13:10:09. If you have a black arrow right here, then you got to check your settings, your input settings. Okay. Because this, you do not have the same number I have if you have a black arrow there on a 7-tick range. The only alternative would be you had to 0.1. Because that's what I set up before I changed it to 0.2. 0.2 is just a little more conservative. By default, it's going to be 0.35. Okay, but I don't have black arrow there at 13:10 on crude. On crude oil. We can't get a black arrow at 13:10. It would have had to come out of the oversold, moving up while the long-term direction was bullish to get that black arrow. There might show a black arrow in here. If we get an up close on this bar, it might show a black arrow. But I don't know, you'll have to send me a screenshot of that black arrow you're talking about because I did not get one. Okay. You should not have one either. If your charts look like the same as mine right here, you should not have one either. Because this has got to come out of the oversold. I'm sorry. Show that black arrow. This bullish, that's going to come out of the oversold. Okay. All right. It's now 117, and we have the 1 NQ trade so far. And yeah. Don't see anything else happening yet. Ronnie, are there 2-3 parameters I look at before? Hang on. Before entering a trade, the market is congested, trend is reaching top, etc. In addition to the range bar setup. I mean, the thing that I look at, Ronnie, is I always want to be coming off a higher swing or a lower swing. That's the one thing that I look at. Okay, you want to be coming off a higher swing or a lower swing. It's good to know if you have a weekly trading zone somewhere, right near you. Since the sensitivity on the CL is 0.02, Gary, 0.02. 0.02. But Ronnie, what I look for, the question was, I don't know if those of you guys who aren't in here and can't see the question. The question was, is there anything I look for in addition to the range bar setup? I like to know if we're going into a weekly trading zone, where we are with regard to the weekly trading zones. Even the midpoint between the zones. Those are good things to use for targets. I like to look and see where the prior swing is, because that's a good indication of where the trade should go at a minimum, where the trade should go. I like to make sure that I have enough room between my entry point and the prior swing to get my stop to break even, to get the risk off the trade. Remember, once you get in the trade, your next priority, after you do the trade entry correctly, your next priority should be getting the risk off the trade, right? Getting a stop to break even. You don't have to worry about the exit at that point. You have to worry about getting your risk off the trade so you don't get stopped out. Okay, so you have to follow the rules for that. And for me, one of the things that I look at, Ron, is from the entry point, how far is it to the swing high? Because I know that's the first area that I should find some resistance for a long trade, right? And is that going to be enough for him to get my stop to break even? Like right in here, the swing high is right here at 70, and the entry point will be right here at 65 probably. So I have 5 ticks right there between the entry point and the swing high. That's just barely enough to get my stop to break even if I were to take a trade here. Okay. We are slowly grinding up over here on the NQ. If it pulls back now and gets this down into the oversold, or it gets this down into the ribbon, we may have another chance at a trade setup. Back over here though, up here, there's nothing happening on gold. You don't want to do anything with that. Okay. Your trading IQ rules, it shows sensitivity of 0.1 on crude. That's why you got an arrow. I changed mine to 0.1 and I didn't get an arrow. If I change mine to 0.1, I still don't get an arrow. 0.1. Bing. You should not get an arrow there. It's not set up to give an arrow. This is set up, but the arrow you were talking about was back here. This is set up for an arrow, but not back here. Okay, back here it's coming out of the oversold. Back here it wasn't. You're not going to get an arrow if it's not coming out of overbought or oversold. That's what triggers the arrow. Being an overbought or oversold, you get the little white arrows or the little red arrows. That's when the black line is either overbought or oversold. That's when those arrows start to trigger. Okay, it's when you come out of the overbought or oversold that the black arrow triggers. So if I put 0.1 on right here, then it puts an arrow right there. I don't know if I put 0.2 on right here, does it take the arrow away? Yep. I changed that last week, Gary, from 0.01 to 0.02 because there were some spots where it was given arrows where the long-term direction was really flat. So I changed it just a little bit. Again, that number is up to you. You can change that however you want to. Okay. So we did put a higher swing here. We should pull back. And if it pulls back, gets this into the oversold, or it gets this down into the ribbon, then that'd be good stuff. Okay. All right. So it's oversold and we're almost in the ribbon. So we need to up close now on that NQ trade. Okay, we need to up close on the NQ bar. It's got a low of 34.50. It's going to have a high of 38.50. So a buy stop at 38.75 like this. 38.75 right now. It means if we get an up close, the top of this bar is going to be at 38.50, given where the bottom of the bar is. the top would be 4 points higher. Okay, because these are 16 tick range bars. So right now, if the bottom stays where it is and it closes at the top is going to be right here at 38.50. If the bottom stays where it is. Now the bottom just moved, so now that's changed. Okay, so we have a lower swing right here right now. And now it's 33.25. Add 4 to that, you're going to have 37.25 plus 1 tick beyond the bar. Okay. This is why I use range bars, because you can be proactive like this. See, the thing keeps going down, down, down. Now it's going to be 30.30 up to 34 plus a tick. Okay. If this one goes down, it's going to disqualify the trades. This closes down. Okay, it did drop down one more tick. Actually, drop down more than 1 tick. And 29.50 up to 33.50, so 33.75 is what you want to have that. So if we get an up close and it pulls this out of the oversold, this is automated to go to break even after 8 ticks in profit. It should have gone to break even already, so I'm going to just throw it at break even. All right, and that means I have to get rid of this, and so that takes off the 30 tick target as well. So I'm going to lock in 4 ticks on this, and I don't know what that thing is over there, but still got just 4 ticks locked in, and I'm out with 4 more ticks. Okay, I think I had an order left on there. All right, Gary, I see that you just sent that to me.
I think that was your automatic target.
I think it was one that I somehow I was long, so it should have been on the other side. The target should have been on the other side.
Okay.
It should have been on the ask side, not on the bid side.
Oh, that's right. Yeah.
So I think I actually left something. I left something out there.
Forget everything I just said.
Something out there on the last trade. Yeah, you got something else going on there, Gary. If I look at this picture, let me take a screenshot of it. Okay. CL. Yeah, you're on the wrong crude. That's why you got it, Gary.
Did you just trigger in on the NQ?
I did, but I took profit on it already.
Okay.
It took me out with 4 ticks in profit. Gary, you're on the wrong crude. That's what you're just doing. You're gonna go to the M contract. Okay. All right, so we wanted this to get up here, right, to the prior swing high, which is done. And now we want it to exceed that and then pull back and give us another trade. We only have 4 minutes left in here. So far we have 2 NQ trades for 8 ticks total. Not a big thing today. But this, Gary, right here is the June contract, the M June contract, and yours is on the K. Okay, so yours was probably really slow today. Okay. That's okay. That's why we try to let everybody know when we're moving contracts and when it comes time to move the contract. But you were right in your picture. You did have a black arrow there. You had a black arrow there and there.
He photoshopped it. No, just kidding.
It's good. Now if I switch this, watch. If I go here and do CL, and I don't know that I can go back to the K con. I can. Here it is. All right. But now I don't have any arrows on there. But we're looking at 13.10, and on 13.10 right here, you can see it came out of the oversold. So if I put it on 0.01, like you have it, if I duplicate everything that you have going on, then there you go. That looks just like yours. Got a black arrow right there, another black arrow right there. It's just like yours. See, and put it on 0.02, and then put it on the right symbol. Then you get none. But that's okay. As long as you can still trade the crude on the K contract, it's all right. It's giving you signals. That's all that matters, really. Yes, bottom line is I'm using 0.02 on the sensitivity now. That is correct. Let's go back into here and see if anybody else asked me any questions. Ronnie, you didn't ask any questions. You said wow, though. Did you say wow about the answer to your question? I think that's what you said wow about. It's astonishing, isn't it? All right, it's 128, guys. I don't know that we're going to get another trade in here. So far, we've had 2 little NQ trades. And both of the NQ trades, it's worth noting, did go up to the prior swing high. That's what you anticipate out of the trade. And Ronnie, that's what I was getting at when I said, when I get into a trade, one of the other little things that I look at is how far I have to the prior swing high, because that's the minimum that you would expect out of a trade. Okay. The minimum you'd expect out of a trade is to get up to the prior swing high. Okay, just a second, Gary. Remember, the markets are always doing the same thing, right? They're going up and down, up and down, up and down, up and down. And if they stop going up, then you stop wanting to trade. But as long as they keep doing that, you expect it's going to go from here back up to here anyway. It's going to attempt to get back up to there. And if it fails to get back up to there, then you get out of that trade with whatever you got, some kind of profit or a break even, and see if it's going to go down. And you start going in the other direction. Okay. You want to see the no trade zone on. It covers up almost all of it right now, the no trade zone, I think, on 2. That's why we didn't get anything in there. The no trade zone was on all of it right there. All right, so this right here didn't really put in a higher swing. So this next bounce off of here, let's see how deep the pullback is. Remember this morning, part of the lesson plan this morning was the leg lengths, right? You guys remember that? Those of you guys that were in there this morning anyway. Part of the lesson plan from this morning was the leg lengths. See how long this leg length was? This one is actually giving you a decent trade. This is a ribbon trade right here. If we had a higher swing, that would be a ribbon trade right there. Now, it was a gap from here to here, so it's not really anything you'd want to do. If this had a higher swing, that'd be a ribbon trade because this didn't get down to oversold. So this leg length right here was longer than this leg length right here. So this push up right here should be about this big. Right, and that big. By saying that big, I mean this big. And Don brought something to my attention. Val's Don brought something to my attention this morning. We have this little ruler thing over here. And I'm going to figure out how to use it correctly, but it does the number of ticks. You see, it was 80 ticks, that leg length. 80 ticks. There, I got to click it twice. Now if I click somewhere else, what happens to it? It goes away. Okay, so anyway, you get to measure it. It was 80 ticks from here to here. From here to here was 80 ticks. And so this move from here up to here should be 80 ticks. Okay. The gold is 0.01. That is right. The gold is still 0.01. All right. Well, that's it, guys. I'm going to have to wrap this up now. It's getting to that point where I have to wrap up the live stream. Yes, that is true, Ronnie. If you're not trending, like that one that I stopped out of today earlier, when you were saying, you thought it was congested and you didn't want to take it, and I took it anyway because I saw something that I thought it might do. The entry point to the swing high was this big, right? Not a high probability trade. Okay, but I saw something in the DOM that made me want to take that, and it stopped me out. So I did something kind of dumb there by doing that, and it stopped me out. But that's it right there. Okay. So I'm gonna go all the way over here now. If you guys are in here, if anybody's in here and you have not taken a free trial with us, anybody that's in the live stream, you have not taken a free trial with us. This is how you do it here. Just go there, sign up for the free trial. If you have a long weekend coming up, we'll get you started before the long weekend, so you'll look at stuff over the long weekend. You really want to download the trading platform if you're going to take the free trial, so you'll be able to do it after hours. You're not just doing it in this half an hour and the 2 hours in the morning. And
keep in mind, crypto and Forex never sleeps. So even though it's a holiday weekend, those markets will be trading.
Yeah, I'm going to say this to you guys today, and I'll say it again tomorrow. the markets are kind of, the way that they're managing the markets over this holiday is dumb. They have a high impact news event coming out Friday morning at 8:30 a.m. And I mean, it's the employment rate.
You didn't give me a chance to say how dumb is it.
Oh, I'm sorry. Go ahead.
How dumb
really
is it?
Dumb.
Okay.
It's really, really dumb. What they're doing, they're going to bottle everything up from Friday at 9:15 until Sunday at 6 p.m. because the markets open up Sunday night at 6 p.m. Eastern time, like they normally do. And they're shutting down the markets from the 8, is it 8:15 or is it 8:15 Friday or is it 8:30? 8:30 Friday. So we have this stuff coming out Friday morning. Super high impact stuff, highest impact stuff all month probably. That's coming out Friday morning at 8:30. And when are they shutting down the markets? 45 minutes later. 45 minutes later is when they're shutting down the equity markets. Okay, so that's going to be all bottled up over the weekend.
Be careful. I will be issuing alerts Thursday night, but we're taking Friday off. So.
Yep. And Easter Sunday at 6 p.m. is when the markets are going to open back up again. Right,
and in many countries, Monday is a holiday, but the U.S. is not.
Yes. Okay. So again, if you have not taken a free trial, let's go to mytradingiq.com, sign up for the free trial there. It really is free. We don't ask for a credit card or anything like that. If you're going to do that, download the trading platform, right? To get into the trading platform, you go right here to trading platforms, trade rules right here. If you have TradingView, you should download the TradingView one or sign up for the TradingView one if you haven't already. Sign up for the TradingView one, and all the rules are right here. Now, every trade has only 3 parts to it. All right, you have the entry, the risk management, and the exit. The entry rules right here are all for the TradingView setups. Okay, risk management and trade exit, they're for DT Pro, TradingView, and for NinjaTrader. But the entry rules, these entry rules right here are all for the TradingView only. To get started with TradingView, all you have to do is give us a username, right? That's all we need is the username. All right, so with that, I'm going to shut off the live stream. I got a bunch of things to do, and I have some meetings coming up this afternoon that I still have to do too. All right, so if anybody's got any questions, you can email us at support@cfrn.net or support@mytradingiq.com. Right, support@cfrn.net or support@mytradingiq.com. Rico's, I know trades till Tuesday if you want to play it safe. No, Monday I'll be there. Okay, you said till Monday, you corrected. Yeah, we'll be here on Monday. It'll be normal open for us on Monday. Sunday night also will be normal. Okay, I don't know what the market's going to be like on Monday, but we'll see. We're not going to be here on Friday. All right, that is it, guys. With that, I'm going to wrap up the live stream right now. And it's almost wrapped up. There. And pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. You have a great day too, Rico. It's heading back out to you right now, Dwayne. We do have another arrow right now on the NQ that I'm going to try to trade right now if I can get on it fast enough. And I just got on it just fast enough.
Let's throw up an NQ chart real quick.
Yeah,
over
here.
here.
You can't see my charts, but there it is.
No.
No.
There's my NQ chart. That's a 30-minute chart, guys.
Yeah. So that's a good indication right there. If you look at Dwayne's 30-minute, you go from where the BBC is down to the swing low right there. The midpoint in between there would be a good area to look for this trade to get up to.
The fact that the step line has crossed red and falling, that's a pretty good indication that price is going to at least attempt to pull back to the VVC. We expect the pullback to hold. It holds more often than it doesn't, and then we'll catch another leg to the downside.
Yes.
Now, the markets have a tendency historically to rally into holiday weekends, so we'll see what happens.
You got to be careful again. If you're going to do anything on Friday morning, I wouldn't. But if you're going to do anything on Friday morning, just make sure your position is closed by the time the markets close. Okay, you want to make sure you're flat. You don't want to have any open positions going into the weekend, because I think there's going to be a lot of gaps on Sunday night. Is what I'm thinking.
I think you could be right. Okay, the recap of the morning session.
8 minutes, one trade, $600.
Good job.
Thank you.
All right, guys. Michael's already told you how to take the free trial. If you've already taken the free trial, this is how you become a lifetime member with no recurring fees, no upsells, No nonsense. Go to eminifuturestrading.com. If you have questions, call 949-42-EMINI or email support@cfrn.net. Now, this lifetime membership includes 2 hours of live training every trading day. It includes unlimited one-on-one private mentoring. The strategy we teach and the indicators that you will own for life are fluid across all markets, all time frames, futures, stocks, crypto, forex. How's it even possible? Because price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That's how markets work. How come you never heard that anywhere else? Because they got a million different things to sell you. We don't. We have the passport. Lifetime access to everything we do, everything we've ever done, and anything we do in the future. Buy a passport, you'll never spend another dime with us. That's a promise. eminifuturestrading.com. Futures Magazine printed this article in 2006. Broke my heart. I had just moved from the world of equities to futures, and they published an article, 9 out of 10 new traders fail. They didn't say why. They just gave all the horrible statistics. So, inquiring minds want to know. I embarked on a journey to find out why. I mean, even the Navy SEALs don't have a 90% washout rate. The answer was right in front of me. Because they didn't have a teacher. Imagine trying to become a pilot, an electrician, a baker, a banker, a candlestick maker, without someone to teach you how to do the job. Well, then you probably would have a 90% washout rate. So, all the holes, all the flaws we saw, and all the nonsense that's out there drove us to create exactly what you see every day at CFRN. As a lifetime member, you also receive the Logic 247 alerts around the clock, Concierge Trade Alerts report every night when it's published. You're able to attend the members-only workshop on Thursday night. And I forgot to ask Michael if we're passing on tomorrow night or not. We'll let you know tomorrow. It truly is everything a trader needs, all under one roof, one low price. And you have around-the-clock support via our multiple Telegram channels. Let's wrap it up with a good word for the day. Steps to forgiveness. Colossians 3:13. This is part 1 of a series. Forgiving one another if anyone has a complaint against another. The misery of living with unforgiveness in your heart always lasts longer than the pain of the offense itself. Always. When you hold on to resentment, you open the door to depression and physical illness. Forgiving brings healing to your wounds and restores your joy. When you don't forgive somebody, you're not hurting them. They could give a rip. The person you're hurting is yourself. Here are 2 steps to help you forgive. Number 1, remember that you have been unconditionally forgiven. Recall God's grace towards you and the price He paid for your forgiveness. By refusing to show mercy, you're like the man Jesus said was forgiven an enormous debt. Yet that same man was unwilling to forgive another man's paltry indebtedness to him. That's in Matthew 18:23 through 24. The grace God has extended to you leaves you no grounds whatsoever to refuse the same grace to the one who hurt you. Number 2, release the offender from the debt they owe you. You may be totally justified in saying, they owe me for what they did. Your friends may agree, the law may agree, and you may be thinking that the only way your offender will learn to do what's right is if they're made to pay for the wrong they did. But as long as you're holding on to your rights, you're chained to the past. It has you in its grip, and your future is being held hostage by the past's control over you. Your offender's sin against you was paid for by the same sacrificial love that canceled your sin debt. So they have the same need and right to forgiveness that you have. And there is more. Forgiveness is not just for their benefit, it's for yours. Luke 6:37. Forgive and you will be forgiven. That's our good word of the day. Thanks so much for tuning in. Oh, hey, by the way, be sure and follow us on Apple Podcasts, on YouTube, and on Apple Podcasts. We went for quite a long period of time without uploading our daily broadcasts to Apple Podcasts because it was just so much easier to just let YouTube do all the heavy lifting. But I've started again. So if you go to Apple Podcasts and you just do, if you just search the keyword Emini, okay, we'll pop right to the top. We would appreciate it ever so much if you would leave us a review. A 5-star review would be even better. That's what we want for Easter in our basket. How about you? Apple Podcast, keyword Emini, you'll pop right to the top. It is, unless I screwed up the XML file yesterday, which I had not touched since 2012. The little copyright down at the bottom, it was from 2005 to 2012. So I had gone, 11 years without updating the XML file. I mean, it pulls in the new podcast every time I upload one, but I just hope I didn't break it because here's what happened. You want to know the full story? Google bought FeedBurner. And then they kind of just abandoned everybody. I spent hours the other day trying to get some help. And so then I just boldly went where I'd never been before, and I either fixed it or broke it. And in a couple hours, I'll know when I upload yesterday's broadcast. YouTube is current each day. Apple lags one day behind for reasons I won't even bother to bore you with. Okay? Okay. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.